Oh, let's check in with the markets. Just a bit to East Africa. Just a bit of a sell down today on the biggest exchange east of the continent, and that's your Nairobi stock market, 1.13%. Flattish 9,200 on the All Share Index. Bamburi shares down by 7.5%. Standard Chartered, one of the largest bank in Kenya, down by 5.05%. Safaricom, the biggest company by market cap in the entire Kenyan market in East Africa, lost about 3.79%. Profit booking. The NSC shares itself, listed on the own NSC PLC, was down 3.29%. That's taking some profit ahead of the long holiday. What's making the headlines? Yes, Kenya's petrol prices down by the biggest margin as President Ruto tried to manage the situation, the fiscal situation of the country in terms of petrol prices, imports, and exchange rate of the shilling. In the meantime, the Kenya is floating a new payment system that is targeting Ugandan traders. That's good news, being part of the East African community, while Ethiopia is asking bondholders for a debt relief ahead of 2024. $1 billion is what is on the table. $30 million is the repayments that the authorities in Addis Ababa ought to repay. But things are looking a little bit tough. So that international conference call to bondholders yesterday didn't really go well as expected. Now, the IMF is proposing 3 steps to support Tanzania as far as the country's affairs is concerned when it comes to foreign exchange, which their president Suluhu Hassan is currently battling there, also east of the continent. But let's get a wider view of things, because an estimated $100 billion of illicit fund leaves Africa on an annual basis, and that's according to some industry estimates. Now, these illegal outflows via over-invoicing and other sources are harmful for a continent that is struggling to increase its share of the global trade. Here is the Dr. Ngozi Okonjo-Iweala. She's the Director General at the World Trade Organization, and she was speaking at a recent presidential dialogue of the Agency on World Trade. Let's listen.
One good thing about the WTO is that it's well, you can look at it both ways. It's a consensus-based organization, right, meaning that this is one of the few places where the voice of even the smallest country has equal weight with that of the largest. It's a little bit different in the other Bretton Woods institutions because you do that by shares. So hopefully by trying to come to some agreements on some critical negotiations that are important to both developing and developed countries, but in particular to developing countries, I hope we can try to rebalance. And His Excellency referred to the fisheries subsidies agreement, which had been languishing for more than 2 decades. So the members succeeded last year, and congratulations to all of them. The ambassadors are here, in finally managing to come together to really negotiate an agreement that means a lot to ordinary people. So I think the way the WTO can help is to look at what are those sorts of agreements that would really support the ordinary person on the ground. And that's why I'm always impatient about why are we taking 10 years to negotiate something.
These agreements take a long time, as you say, to negotiate. Why does it take so long, and what could be done to accelerate things?
They take so long because each member has its particular interests. And the problem is that over time, members have dug into their interests very deeply, and they don't move. So you keep hearing the same talking points you've heard for 10 years and 20 years. We managed to move that in fisheries, and we got an agreement. We are trying now in agriculture, but agriculture is even more difficult because you have very serious domestic lobbies.
Right. And
when people have elections, they want to make sure that their farmers see them as fighting for them all over the world. So you sometimes get really stuck. But I think we've delivered on fisheries, we should deliver on agriculture, we should deliver on digital trade, which is something that small and medium enterprises and women all over the developing countries find extremely useful. So let us look for those things. This is how the WTO can be relevant. If we don't get those agreements, then we're not relevant. Narrative about Africa is one of aid, of pity, of we have to help. And Africans sometimes play into this, okay? And there's a totally different narrative for people like me, like the president, which is that the continent has a lot to offer. We have the critical minerals. We have the prime minister from Namibia here. They're going to be developing green hydrogen.
Dr. Ngozi Okonjo-Iweala, the Director General of the World Trade Organization. Let me just walk you through back on the marketplace. So the Southern Africa's trading day, a very big jump to the upside today, a massive 3.65%, 365 basis points. We just spread it on the GST. For the second day, the market was upside. Industrials 1.6, resources 7.6, financials up by roughly 4%, and that's the biggest jump again for the second day this week from the most advanced markets on the continent. The second stock market was down by 0.03%. Botswana's shares up by 0.04%, while Zimbabwe's stock market fell very sharply 1.77%, and that's our profit taking just ahead of the holidays as well. But let's move on to look at what's making the headlines. South Africa is looking at about roughly 500 billion rand contingency funds to cut the country's headline debt. Good news, because Total Energies is looking at 216 megawatt solar plant construction in South Africa, while the EFDB is giving $105 million to Angola's agri-sector reforms. And those are your headlines at this time from Southern African market. Let's just leave it there. So you've got oil prices heading for their first weekly gain since the month of October. The market is beginning to digest the latest OPEC Plus and IEA's forecast for this year as well as into 2024. 300,000 barrels per day was what OPEC was forecasting, but you've got a bigger picture from the International Energy Agency. Those reports for the final month this year are out on the street, and that's helping the numbers a bit. But you've got a bit of a retracing that you see in those pairs in the basket, just about a 0.75% for the London Brent and the US West Texas Intermediate. Nat gas up by 3.09%, but gasoline down by 20 basis points. And just give you a sense of where the market on commodities were. So it's been 18 months since a group of some 145 candidates were put together virtually across the continent by the African Development Bank into an academy that's focused on public finance management. Now, that training program was completed via a hybrid format this week here in Nigeria, with nearly 36 of the participants in attendance. Let's take excerpts from the closing presentation and a testimonial from one of those participants.
The curriculum is undoubtedly rounded and apt for the needs of our countries in upscaling the urgently needed knowledge and capability of public officials who work in the public financial and debt management functions of government. This graduation is of the serving participants, which we are witnessing today, December 14, 2023, is a testament to the commitment of the bank in responding to the need of the regional member countries to fast-track capacity development towards the achievement of the bank's High Five agenda, the UN Sustainable Development Goals, and the AU Agenda 2063. I understand that the PFMA provides a platform for the aggregation of knowledge from relevant institutions and making them available to our public financial management officials. I find this very innovative in capacity development and should be scaled to other areas of capacity development needs in our government beyond public financial management. I commend institutions that partnered with AFDB in delivering this innovative program, especially the World Bank, the International Monetary Fund, the Commonwealth Secretariat, the United Nations Conference on Trade and Development, UNCTAD, African Tax Administration Forum, ATAF, Collaborative Africa Budget Reform Initiative, CABRI, Africa Organization of English-Speaking Supreme Audit Institutions, West African Institute for Financial and Economic Management, WIFM, Macroeconomic and Financial Management Institute of Eastern and Southern Africa, MEFMI, OECD Global Forum, Open Government Partnership, Open Ownership, Intergovernmental Action Group Against Money Laundering in West Africa, GIABA, and African Finance Corporation, among others. I understand that in addition to the graduating ceremony, There are graduation ceremony. There are other PFM capacity development events holding here over this weekend, including the dialogue session of Africa public debt managers from across the continent to deliberate on ways to enhance capacity development on debt management and formation of an African debt managers initiative network, as well as the dissemination of the benchmark macroeconomic models for effective policy management in Africa report.
The Academy will also work with policymakers on soft skills that enhances development and that develops changes in attitudes and mindsets. One of our eminent scholars just launched a book on development as attitude. This will be achieved through high-level policy dialogue with leaders and engagement with civil society, youths and women to understand and propagate principles of probity, accountability, and in public services and public finance management. We are doing this because we understand that technical knowledge alone will not create the changes we seek. These programs are complemented by the bank's institutional support and program-based operations designed to foster necessary governance reforms needed to curb leakages and corruption, illicit financial and resource flows, resource theft, and also strengthen supreme audit and other oversight functions in countries. Several instruments are already being developed, including beneficial ownership registers and a public service delivery index that are being developed with our partners to help us in the implementation, monitoring, and evaluation stages of this program.
It's been quite an extensive training, and then the takeaway for me has been the fact that we didn't limit ourselves to only the PFM cycle, but we looked at the entire landscape of PFM, where we had other aspects that influence efficient public financial management. When you look at public financial management, you are looking at the how governments of nations mobilize resources, allocate the resources, use the resources, and account for the resources. So every little aspect of the totality of the PFM cycle, from the macro fiscal forecasting, everything was taken into consideration. The advantage was the peer experiences that we're able to share from different countries. We share different experiences, and we had to practicalize what we had actually been taught. So it wasn't just like a classroom model, but there were exercises and assignments where we tried to domesticate whatever we had learned in our peculiar circumstances. For me, from Ghana, as a head of budget development, it's been quite helpful because it exposed me to the other landscape of the entire PFM. And as I go back home, I should be able to ensure that what I do in the area of budget development, we are able to allocate the resources efficiently, and then we'll follow up to ensure that we are getting value for money in whatever we are using our resources for.
Meanwhile, the AFDB group today in Abuja released a new report that benchmark macroeconomic models for effective policy management in Africa. That 50-page document was presented to an audience of Nigerian government officials and AFDB group officials as well, among others. Erike Ogudele is the officer-in-charge director at the African Development Institute, and he outlined more about the new report.
In the process of working and supporting regional member countries, we noticed that there was a big gap. And that gap rests on the fact that many of the countries either do not have any macroeconomic model that could assist them with policy making, or when they have some that exist, they do not address emerging challenges that require some recalibration that help them to ensure that those policies actually talk to the realities of the day. We also noticed that some of them were not even prepared by people who are familiar with the context of the countries that they were supposed to address. So we felt, therefore, that it is important that we undertake this important work with a view to understanding how important have some of these countries taken macroeconomic modeling, and to what extent are those models that are developed consistent with the realities in these countries. And the key objective of this study is actually to be able to provide capacity development to regional member countries. And when we talk about capacity development, we're looking at 3 areas: training, technical assistance, and policy dialogue. We want our capacity development initiatives for the countries to be bottom-up, to be built and driven by what we see the realities in the countries. So the essence of this diagnostic analysis, therefore, is to have that understanding, identify the gaps that exist, and based on that gap, be able to initiate policies that can talk to those specific challenges with a view to supporting the regional member countries. Now, what methodology did we adopt? It was a questionnaire, a survey adopted and implemented through questionnaire. Questions were drafted from us with the help of the African Economic Research Consortium with a view to understanding those basic issues that countries need to know. Now, what are some of the questions that we're looking forward to understanding? Number one, we want to know do countries have models at all, macroeconomic models that serve as a template or as a blueprint for policy making? We also wanted to know what type of macroeconomic models do they have, if they have any one at all, and to what extent do they differ from institutions. Remember, we have central banks on the monetary side, and we have Ministry of Budget and Planning of Finance on the fiscal side. So the point, therefore, is to what extent are there differences between the type of macroeconomic models that these different institutions adopt? We also want to know, when those budgets exist, do they use them? To what extent do they use them to assist policy making? We also want to know what are the outcomes, what are the policy outcomes from using those models, what are the lessons that they learned in the process of using those models? And do these countries have the capability to operationalize the model, to recalibrate this model, and also to be able to, operate and use them in a more efficient way? Are they capable of simulations? Can they also be able to forecast properly to assist the countries to be able to, especially when it comes to data disaggregation, sectoral disaggregation, to what extent are they able to address some of these issues? The point about flexibility also come in. To what extent are these models flexible, that they can easily change them, modify them to address some emerging challenges, like COVID, for example, like the geopolitical tensions going on, for example. So these are some of the things that we also look forward to know. And who is supporting the countries to develop this model, and who are the countries? Are they able to manage them by themselves, or do they rely on external partners to do this for them? So these are some of the key things we really look forward to understanding. So let's talk briefly then about some of the findings that we have in this model. Now, the first thing we find here is the response rate. Again, like I mentioned, we had a questionnaire that we administered to all the 54 regional member countries of the bank. But at the end of the day, we received only 31 responses. So you can imagine, out of 54, only 31 countries responded, which is just less than 60% of the response rate. Well, for survey, some of us will say that's good enough, because as we do know, it's always very difficult when you're undertaking surveys. Many times you don't receive feedback from countries. So we have this number of countries, 31, who responded. And in terms of the language classification, We have 52 from Anglophone and 45 from Francophone and 3 from Lusophone.